I always tell you guys that the economy is like a big set of lungs. You breathe in, you breathe out. That's economic expansion, economic contraction. We are about to enter a big period of economic contraction, deleveraging, deflation, because we've got a situation now where we've got cryptocurrencies at all-time highs or very high prices, house prices at very high prices, you've got stocks at very high prices, you've got precious metals at very high prices. There's just been a massive dump of liquidity into the system, monetary creation, taking on debt, and now all of a sudden everyone's all happy and everything's going up in price. But guess what? You can only run so far to one edge of the raft. Everyone's going to be coming back over. And you saw what happened a couple of weeks ago or a week ago where it dropped so fast and everything was just red on the screen and everyone started panicking. And that was a short-lived moment or a blip. But wait till you see the next one where it gets followed on day after day with more red, more losses. It's necessary for a lung to breathe out. We are going to have deflation. And that's going to lead into my second part of this premise that we're going to go into massive double-digit inflation. But first, the deflation has to happen. I'm going to explain everything in this video. You guys are going to love it. And you're going to get to watch what I'm telling you right now play out in front of your very eyes.
Please subscribe to get our next actionable video.
And before we get into the inflation part, and I'm going to explain to you why we're going to get into massive double-digit inflation, first we're going to talk about deflation. All this economic overextension is going to come back now. You're going to see cryptocurrency prices falling pretty significantly. You're going to see stock prices falling very significantly. You're going to see real estate do what it's already begun to do now, but what I've been telling you is going to be happening for years now. And also I looked into this a lot over the last week and a half. I'm trying to figure out what happens to gold mining stocks. And this is one of the questions that you guys are asking me. All these gold mining stocks that have been doing so incredibly well. When do we pull the trigger? Where do we jump out? When do we take our profits? And I'm telling you, it's no time soon. The more I looked into it, the more I realized this. And this is not personalized trading advice. You do what you're going to do. You make your own decisions. You leave with the results of those. But I'm telling you from what I've looked at, my understanding is that in general, typically, the stocks that are involved with gold mining, precious metals, they will not fall at first when the rest of the market is collapsing. And that part of the market goes and finishes its collapse down maybe 60% or more, at which point then the mining stocks start falling. That is a historical precedent. That's what's most likely to happen, especially when you include a lot of things that are happening right now that weren't happening before.
You help yourself and people just like us when you click the like button.
If you go back decades, there wasn't as much central bank buying from India, from Saudi Arabia of gold, from China, of course, from every country in the world except for Western nations for some reason. Europe, North America, we're just getting rid of gold, selling gold. It makes no sense at all, and it's a massive, massive mistake. The countries that want to be more relevant in the future know that they're going to buy a ton of gold, so they did. Now Russia, China, loaded up on gold. If they get into any kind of military conflict, which they can actually cause, that just drives up the value of the investment they just bought. You can manipulate the markets. You can buy a bunch of gold and then invade Ukraine. And all of a sudden, all the gold you bought is worth more. But the real moment will be when they announce and release the BRICS currency that's backed by gold. All the BRICS nations have been buying gold aggressively. And they're almost ready to announce what they've been working on for decades now. This is going to be an alternative to the US dollar. It's going to get China and Russia out from underneath the threat of sanctions from America. And it will be the only currency that is backed by anything that is actual real money, which is gold. Every other currency is a fiat currency. That means that it's not backed by anything. It's just an idea that we all agree upon. So what can I tell you about the deflation? The reason that we're set up right now, overextended so far one way, and it's going to come back, is because of a lot of the reasons I'm about to tell you right now. The overvalued markets that I've been talking about for a while, and they keep on rising, I know, but when they come down, it makes up for all of the extra 5%, 10% you might have got. In fact, I think the risk horizon, if you want to invest in stocks right now because they've done so well and you hope that you're going to get another 5 or 10%, I think that's the most ill-advised approach. I don't think you should be trying to get 5 or 10% on stocks right now. Oh, Nvidia is going to do well. You want to buy that stock? Go ahead. Donald Trump media stock, whatever. It's all going to be coming down. And that's whether or not we go into a recession, which every recessionary indicator, every early warning sign is just flashing red, screaming that this recession that was delayed a while because of the monetary creation and quantitative easing, all of this recession that's been on the doorstep, banging on the door this whole time, is going to kick right through that door and walk in. Some recessionary indicators are an inversion of the yield curve, which happened ages ago, and it's been inverted for a while now. Every time there's a recession, you can look back and see the inversion of the yield curve. Or if you look at the US dollar chart, it's falling as you'd expect. Here's a chart of the DXY. And then you see things like commodities, like copper, that are doing a little bit worse, or steel. And what's the other thing that we see a lot of right before the recession and into the recession, which might even cause the recession, are the massive increases in number one, layoffs, and number two, bankruptcies. Layoffs go first, and then they lay off more, and they lay off more, and next thing you know, the company goes bankrupt. That's how it works. Here's a chart of recent bankruptcies. You never look at the final number or the actual level. It doesn't matter. Think of it. I invite you to think of it this way. Always look at the trend. Are rates going higher or are they going lower? You don't say rates are high. You say from here, they're going to go higher or lower. That's the way to invest. But I've long said that the unemployment rate was going to increase. And it was incredibly low. So was that such a great call? The reason is, even when people weren't realizing it.
The Peter Leeds newsletter is one of the most popular financial publications of all time.
I was telling you a long time ago that this unemployment rate's got to increase as we roll into the recession. It doesn't increase before the recession. You'll remember me telling you this. It increases once we are in the recession. The other thing that increases before a recession is financial fraud, and there's more fraud than ever, and there's a lot of different types of crime that are increasing at the same time as well. Crime will get worse when the economy gets worse. According to the data book, people reported losing $10 billion in scams in 2023. That's $1 billion more than 2022, and the highest ever in losses reported to the FTC. And one more chart here for you. I got a chart of the inflation rate right now. People look at this chart and they say, is this inflation coming down? No, it's an approach to deflation. It's an approach also towards recession. And you've been told for years that the economy is so strong that we've got everything under control. And I've said for years, no, we don't. And it is not strong. And just look at the revision. They say that we had created so many jobs. Everyone says, wow, unemployment rate's so low. We're doing so well. The economy's so strong. And then months later, they come out and say, oh, we were wrong. I'm sorry. 818,000 of the jobs that we thought were there that existed, they just don't. Non-farm payroll growth revised down by 818,000, Labor Department says. The Bureau of Labor Statistics said the actual job growth was nearly 30% less than initially reported. So you're lied to 30% more than you should have been. That's a 30% lie. The revision to the payrolls is the largest since 2009. The biggest downward revision came in professional and business services, where job growth was 358,000 less than initially reported. I'm just going to keep on telling you guys that this economy is really weak. No matter what Joe Biden and Kamala Harris says, no matter what politicians tell you, everybody is saying the economy is so strong because it needs to be strong for them to look good or accomplish what they're trying to accomplish. They need you to believe that the economy is strong. And they point to unemployment and they point to the stock market, both of which are going to look very different 6 months from now. Both of which are going to look very different 6 months from now. When the recession happens, when all this deflation happens, there's going to be a lot of financial calamities. A lot of people are going to lose fortunes. It's going to be so much worse than you realize right now because you don't remember what it's like when the markets were going down. It's been so long. Most of the stockbrokers right now haven't even experienced a really heavy-duty, serious downtrend in the markets. And as I've told you before, when they start lowering rates, which now today, literally today, Jerome Powell says it's time to start lowering rates, as if that surprised anybody, which is what makes me so mad when he goes, yeah, we're going to lower rates, which was news to absolutely no one. And all of a sudden, gold prices go up $35. It doesn't make any sense because it was so clearly telegraphed and obvious. So there's your opportunity. Just pay attention. There's free money everywhere.
The Peter Leeds newsletter is one of the most popular financial publications of all time.
But this is from the St. Louis Fed. You can see how when they start lowering rates, that's when the recession gets set off. Which is strange that Jerome Powell doesn't seem to know this. The vast majority of people don't know this. But look at here. This next phase of our economy is going to be incredibly bad. Ireland is in recession. Canada is in recession. Germany is in recession. Japan's in recession. China is in recession. America will be next. But this all leads into the second part of the premise where you go from deflation, everyone loses a lot of money. There's a lot of values all over the place. That's why I suggested you go to cash. And also if you own gold mining companies or silver mining companies, don't act yet, in my opinion. Wait until the stock market's almost done crashing and then you get out of the gold stocks. But not until, because between now and when you have to get out of the gold stocks, you still got tremendously higher to go in that brief window of time. Just like you've seen since I've been talking about gold since it was $1,600 or so. It's going up incredibly quickly compared to historical precedents, compared to other types of investments, compared to real estate, compared to cryptocurrencies, compared to stocks. Gold is outperforming everything. And I've been telling you for years that it's going to outperform everything. And I made a really cool video that's going to be out after this one that is talking about things I said many years ago, talking about why you need to get into gold. And I started doing that when silver prices were at $20. After a long time of being unloved, gold is finally starting to wake up. And you're seeing this possibly caused by the rampant buying that China is doing in preparation for their new reserve world currency that's backed by gold. But what does the Federal Reserve do when everything is red on the screen? When you're looking for the plunge protection team to come and save you, what happens is the Federal Reserve overreacts. And they do quantitative easing, they print more money, and they just greedily take on more debt, and everything is just given unnatural long life before the reality happens. And whatever they do to delay things, whatever artificial influence they roll out, that will be temporary. And when it wears away, the height they brought us to, that's how much harder it's going to be on the way down. So don't celebrate an increase in the stock market. That doesn't mean the economy is strong. It just means that we are all going to have even more harm to us financially when we come down from the unrealistic height. We go past realistic levels and even further down. You overcorrect to the downside. And that's when you bring all your cash to bear and buy up all of these low-priced assets. For example, stocks go down 60%. And in my view, gold prices, silver prices will keep on going higher. But at that point, that's when you sell the precious metal stocks and roll it into cash and roll it into a lot of these stocks that used to be $100 and are now trading for $10. When the Federal Reserve overreacts with monetary creation, they are going to do something I did not believe that they could do. They are going to make this chart look even stupider. Who can look at this chart and understand that the economy is in a lot of trouble? This is combined with the debt chart. All of a sudden, we don't really even have an economy. We just have an economic environment that we're holding up, waiting for it to go back to reality. One thing about reality, it just keeps on showing up. And that will become a time after the deflation is done. That will become a time of double-digit unemployment, double-digit inflation. Commodities, not including precious metals, are going to go down. Stocks are going to go down. Real estate's going to come down. Cryptocurrencies is going to come down. I feel like this is patently obvious. Maybe I'm wrong. This is what's going to happen. I'm just telling you to help you. Gold miners will fall hard in price, but not before the majority of stocks have already fallen over 65%. Plus, you've got this election. Both parties, you guys get two choices, one or the other, A or B. It's a light switch for some reason. You got two parties. They're both saying, Jerome Powell, you've got to lower interest rates. They're both pushing for lower interest rates. And since they are the ones who choose for Jerome Powell to have a job, he'll do what he's told. And if you want to look at historical precedents, look back over history forever, then you'll agree with me that things are going to come back to a realistic level, that they're going to overcorrect. It's going to be incredibly surprising when people who have become a stockbroker have never seen a down market. But here's the real crux of why we get into massive double-digit inflation. In the recession, you're going to see things like the velocity of money slowing down. It's already really slow. This is just how many times the dollar is used as it passes through the economy. So over a year, usually it's by a year, what's the velocity of money? If it's 5, maybe that dollar paid the guy who painted your house He bought some food. The restaurant owner paid their workers. Those workers bought food at another restaurant. That money went to pay some bills. That's a velocity of money of 5. The more active the economy gets, the higher the velocity of money is going to go, and vice versa. But right now, the velocity of money is really low. And we only have mild inflation when there's not really a lot of activity in the economy. But there's just more and more dollars that are going to be brought to bear. Not only created brand new, there's US dollars all overseas. Countries own hundreds of millions, if not billions, of US dollars. They just hold them. And they use that to transact for oil purchases from Saudi Arabia, for example. But now that the petrodollar is waning, over time, it'll just keep on getting worse each day. Not quickly, but worse each day. Fewer dollars are needed to purchase oil. People are doing it in petro yuan. You can do it in whatever currency you decide. Whoever's selling the oil and whoever's buying the oil, it's between them. It's got nothing to do with us. We've had this artificial petrodollar system based on an agreement between America and Saudi Arabia. And I tell you about artificial things. They're always temporary. And now the petrodollar is fading away, waning. And there's more countries that say, why do we need $500 million of US dollars for if we're not going to use them? And so those dollars eventually find their way back to America. That country could either buy things from America, like fighter jets, or they could buy something from another country that then buy something from America. Eventually all those dollars come home to roost. And then what you have is all the new dollars created, the current dollars that are here, all these new dollars coming back to America, and all of a sudden we're just crushed. We're awash of all these US dollars, and all of a sudden there's fewer goods because we're creating less. We're usually buying stuff from other countries. As our dollar falls, it'll become more expensive to buy things from other countries. So you start looking internally, and those dollars not only come back to our shores, but they stay within our shores. And as the velocity of money picks up at all, that just drives inflation higher. That's exactly how it's going to play out. As well, a lot of American debts can only be paid back with US dollars. So a country or an entity owns debt to America. When they pay it back, that's going to be US dollars coming back home to roost. And I've showed you many times about the declining ownership. What we've lived off is that China and Japan have graciously bought our treasury bonds. That money covers over our deficit. Things we bought that we couldn't afford to pay for. We get the money from China and Japan. They're not doing that anymore. Not only are they not buying, which is step 1, they're selling. That's step 2. They're lowering their amount of exposure to American debt. And all of a sudden now we have to create our own new money to pay for things because we don't have the money to pay for stuff. We've got $10. We spend 20. So we just make up another 10. So what do you do about all this? The only one thing you need to do about it is to understand this is how it's going to play out. Everything else will come to you. Just take a nap, go to bed, wake up tomorrow, you know exactly what to do. If you believe and you understand what I'm saying is going to happen. Look into it yourself, find out for yourself. I've got a pretty good record of trying to survive by being right about this stuff. My business, if I eat, it means that I'm getting something right. And I've done that for decades and decades. I know that everybody and their grandma's on YouTube right now. I was on dial-up internet. When I had to get credit card processing, I had a multi-month process filling out paperwork because nobody else did it. You dial up and you hear that old dial-up sound. Do you remember that, you guys? If you remember phone booths, you probably remember the dial-up sound. That's how long I've been doing this. Exactly this. I've never changed what I'm doing. The only thing that's different now is that I've disbanded my entire team and I just take care of everything myself. You guys might have noticed if you ask a question to customer service that I'm the one who replies to it, which is kind of good, but also kind of like, you probably wonder like, why is this guy doing all this? But it's because it's just me now. I'm just going on my own solo career. You're going to want to hold, in my opinion, your precious metals companies, silver, gold, miners, the physical metals, just hold on to it and don't stress out and don't worry. Even when it dips. Just like we saw 2 days ago, gold prices dipped a lot and people were worried about it. They're reaching out to me. I'm on the front lines here. And then what happens? You wait a day and it goes back up. When Jerome Powell says what you all knew he was going to say, and all of a sudden people react to it, how could you not already know this? But anyways, you're going to want to get out of all of these stocks, in my opinion, all of them, unless it's precious metals or oil. Oil is always being pushed lower because the entire global economy is slowing down, as I told you. Ireland, Japan, China. But that's what the whole spike and fade video about oil was, that it's just being pulled lower constantly, day by day, minute by minute. But at the same time, it's prone to massive instantaneous spikes if any kind of military conflict breaks out.
Please subscribe to get our next actionable video.
Speaking of which, you want to ask me a question, just email me and you can have direct contact with me. I will talk to you all the time if you become a Peter Leeds insider. Plus all the other benefits you get if you go check out peterleeds.com/insiders.